Hello guys, it's Max here from Daily Market Movements. Today it is the 3rd of November, which means it is currently a Wednesday, meaning that we are halfway through the trading week. So I'm just going to quickly analyze the gold, Nasdaq100, S&P 500, crude oil and euro US dollar markets as I always do. On Sunday I posted my expectations going into this week. This midweek video I'm just going to be analyzing what the markets have done from Monday until now and what I expect them to do from now going into the end of the week as we trade into Friday. So I'm going to start off this video with the gold over the US dollar markets. Gold has been very choppy. We bounced nicely on Monday off that 50-day EMA. We went to go and test a 200-day EMA, which is that blue line on your screens up at 1794. We've been rejected once again at the 200-day EMA. And the reason I put this circle around this 200-day EMA is because we have really struggled to clear the 200-day EMA here. We keep having false breakouts or just struggling to break above it. And during today's trading session, we have now been rejected and we have targeted that 50-day EMA. So we are currently trading up at 1780. That is where the 50-day EMA, which is this red line, on your screens, is. And if we break below this, this EMA line here, then we will go and trade down towards the 23% fib level, which is down at 1770. If we break below that, then we go to 1750, and we break below that, we go all the way down to 1723. And if we break below that 1723 area, then my medium to longer term target here for the gold markets is 1700 down to 1680. But we still haven't broken below the 50-day EMA, which means that this bull trend here is still intact. And you could argue, we could be in an uptrend here, however you want to draw it. You've got a trend line there. You could draw a trend line like that. We could see a bounce here, which takes us back towards the 200-day EMA. And if we clear this 200-day EMA, then we see a move straight up towards 1830, which is the B zone of this ABC correction that we've been trading in for some time. So going into the next couple of trading days as we finish this trading week, the big question is whether the 50-day EMA will hold here as support and whether we can break above the 200-day EMA to go and target 1830. So that's what I'm going to be looking for here in the gold markets. Moving over to the Nasdaq100, the Nasdaq100 continues to create brand new all-time highs here. There's a lot of crazy stuff going on in the markets right now. Of course, we have Tesla, for example, which has a market cap of 1.2 trillion that traded from $900 a share all the way up to 1,200. We're seeing loads of the meme stocks now starting to take off again, which is not necessarily a good thing. If I take you back, when was it? I think it was February time here, which was this period here. If I just box that off, we did have a brief 5 to 10% correction here in the Nasdaq100, the S&P 500, and the Dow Jones 30, and that was when we started to see AMC and GameStop, GME all starting to rally rather significantly, and it was just like a wild time in the markets, and we are starting to see signs of that now occurring in the market. So whether that could indicate that we might have a short-term pullback, it's yet to be told, but I am not buying the markets up at these all-time highs. As I mentioned on Monday, I'm waiting for that pullback here. Look at the RSI as well. The RSI is currently up at 71.71, so we are considered to be overbought in the short run. So I think buying up at these high levels just wouldn't make sense from a risk perspective. It's all about your risk management and risk reward ratio, and right now it's a pretty bad ratio because we could fall to the 50-day EMA, which is down at 15,292. In fact, we could even fall lower down towards the 200-day EMA. Although it seems very unlikely, it is possible. But on the flip side, you'd be risking all that downside just to perhaps go up towards 16,000. 16,000, of course, is a large it's a large figure, a large round figure, so that will have a psychological effect and could act as the new roof in this market. So the risk reward just isn't there for me right now. What I would be interested in though is a pullback towards a 50-day EMA. If we got that pullback to that 15,500 area, that would be a fantastic buying opportunity up towards 16,000. But until we see some value created here in the Nasdaq100, then I will not be entering this market. Moving over to the S&P 500 now. Very similar to the Nasdaq100, we have now gone ahead and achieved the top of that green box that I was targeting up at 4,600. Just like the Nasdaq100 though, I do not want to enter any trades at these high levels. RSI is currently at 69.84, so we're pretty much at that 70 level, which tells us that we're overbought here. You know, it's been a fantastic rally here from the S&P 500, especially from those lows where we were trading at back at the beginning of October. But again, I'm waiting for that pullback. I'm waiting for some value to occur here in the S&P 500, which will be that 50-day EMA. If we could fall down towards 4,500, this is the area where I will be willing to commit some money and trade it up towards the upside, towards 4,600 again, and perhaps, you know, going on to 4,800 and then 5,000. My personal end of the year target for the S&P 500 is that 4,800 to 5,000 area. So I am bullish for the S&P 500, and you know, could the S&P 500 continue to trade up towards 4,800? Absolutely. In fact, I would not be surprised one bit if this market did continue to trade towards the upside. But the risk ratio right now for me is just not good enough, and I just prefer to sit on the sidelines and wait for that pullback to occur. Moving over to the crude oil markets, crude oil continues to trade sideways here. We're currently at $82.67 a barrel. This is good for the crude oil markets. As you can see, the RSI is beginning to correct itself. It is now down at 59.90. So all this is here, if I just box it off for you, all this, you know, this past couple of weeks where we've just been consolidating, trading sideways. For me, this is just the crude oil markets recharging its batteries before we have that next leg higher. And when I say next leg higher, I think we are targeting towards $90 a barrel. I would not be surprised at all if we saw energy prices trade that high. You know, it's been such a bullish industry this you know, these past 12 months. The energy sector has, you know, been one of the best performing sectors, and I think that it will continue to do very well as we go into 2022. So I would be starting to buy the crude oil markets now that the RSI has corrected and trade it up towards $84. That being said, I still believe we could go a little bit lower, perhaps down below $80. As you can see, the bottom of this rectangle that we've been trading in does mark $80, so we could go retest that $80 a barrel level. I do actually still have a small short position open, and I'm looking to take profit down at 80. But if we get down to 80, that's an area where I will be willing to commit a significant amount of money towards the upside and target towards $90 a barrel. Last but not least, the euro US dollar. Yesterday, I opened a buy position again here for the euro US dollar, adding to my current buy position that I opened at 1.155. I personally prefer the euro US dollar medium to long term. One thing that I do want to point out as well is that we have the Fed coming out today, expecting to announce a tapering process of $15 billion a month. Because currently the Federal Reserve is injecting up to $120 billion of capital into financial assets on a monthly basis to try and help with that massive correction we had during the coronavirus, and trying to, you know, reboost the economy. And I think that the euro will perform a lot better than the US dollar medium to long term. So I've just added to another buy position. I'm targeting up towards a 50-day EMA near that 1.17 area, and I'm cutting my losses down at 1.15. So this is what I'm going to be looking for going into Friday, is whether we can see the uptick back towards a 50-day EMA. I do recognize that we are currently in a downtrend, but if we can break out of this downtrend, then the euro US dollar market should start to perform very, very well. And I do anticipate a move up towards 1.20 and then eventually up towards 1.23. I'm going to wrap it up for today. Thank you very much for watching my videos. For those who would like to follow my trades more in depth, then you can head over to my website, dailymarketmovements.com. That will land you on this page here, where I have plenty more information about the WhatsApp service that I have, where I send signals. Currently, we have over 1,450 traders following following my trades worldwide. So just a massive thank you to everyone who is involved, and a huge welcome to the team for everyone who joined from Monday. Again, we had a large number of you. I think we had over about 40 traders joining our WhatsApp group. So thank you very much. Welcome to the team. Have a lovely rest of your week, and I will see you all on Friday, where I will come out and do that video where I conclude this week's market movements.